So you got touch the top, a breakthrough, and then a pullback, right? And so here's the first attempt of the break, the second attempt of the break. If it does come back and hit that, that could turn into a ride the wave situation on the up, but it could also turn as well, right? So if it fails to cross this, then it could come down and test the bottom. And this is our kind of ride the wave situation here for the cells. And why did I only get into one trade? So looking for, this is right at that action point right there. See what it does. Should have gotten into more trades.
Thought you said we should not use coulda, shoulda.
Look at all that money I missed.
No, I was trying to build a layer, but I started looking at the market instead of trading. That's all good. All right, here's the action point. Let's see if it stalls. If it stalls, I'll do a recycle or get into some shorts with the red back down. Waiting to see. I just don't like taking the bus route. Get in the fast lane.
So what do you look for when it stalls? Because it was pausing right there, but it continued up.
A blue push pressure that comes down. So if it flickers, is different than a stall. Does that make sense? So if it's flickering green, that means pressure's coming in to push it high. So case in point right here, it's not stalling, but it's flickering. It's moving up still. And then there's the coming in. We'll see, because I have enough meat on the bone, I can let it. Now I'm in a risk versus reward situation where if it does pop up, it could turn into a ride the wave. But if it comes down 50% of that candle, then I'll just get out for the rundown. Because here's that, that next attempt.
So like right here, it's stalling, right?
Mm-hmm. So like I said, I turned it into a risk versus reward instead of a typical stall. Because if this was inside of consolidation or inside of a range, I would have taken it out by now. But because this is a risk versus reward where I want it to pop higher to get into a ride the wave, I'm going to give it at least 50% of that candle. I'll wait. So right here is kind of, if it crosses that line, I dare you to cross that line. Then I'll get out. And it did. So I'll get out. See if it gets. Just that. Put it back in.
Hey, Dave, could you just remind me how big your max size trading will be?
My max position size?
Yeah.
Generally, I usually like to do somewhere between, with this account size of 13, I'm usually about 3 to 4 lots. If I'm over 2, that means I'm heavy. So if I'm over 2, it means I'm heavy and I'm looking to reduce my position size, but I'll still use my 3 and my 4 for fix it or opportunities.
Thanks.
So I'll trade up to 2 like normal. And then once I hit 2, I'll start looking at opportunities to lighten, right? So that's kind of what I do. Let's cross that.
So why did you get out and get it back at the simulator?
That's a great question. I don't really have an answer for you because I've been looking at it right this second where this is going to form and this will either turn into an M or it'll turn into a reverse head and shoulders and move higher. So that's why this time I only put 1 on to see if it'll test the top again. But I wanted to take my profit on that so that if it does go down, it's basically I got a trade where I take 4 pips. So if I lose 2 pips, I've already put it in the bank. So it's kind of protected the loss, if that makes sense. So just managing the trades would probably be my answer. But I'm also don't know if it's going to pop up. So I'm just looking for a recycle here. Let's see. You guys are asking really good questions, but I haven't woken up yet.
What time do you expect to wake up?
Give me an hour. Just kidding.
Well, 8 o'clock.
Like, this is awesome, but this is awesome. You guys are talking. But you never talk on a Monday. Just kidding.
Oh gosh.
Just kidding. I do think it's awesome. It makes my job so much easier when I can have conversations.
Even if you're not awake.
Even if I'm not awake.
I've been up since 5.
5 my time, so 2 hours.
My
5
time.
your time, so 3 hours, right? Because you're an hour ahead. For some of you guys on the East Coast, it's awesome. That's what I like about the East Coast. Pacific, do we have any people here where it's earlier than my time? All right. I thought that was going to happen.
I think the uptrend is stronger.
Yeah, the uptrend is stronger. I'm just looking for like little sips right now on the market, wherever I can get it. So if this fails to go back up, then I'll just get into a short for a possible break of that.
So earlier I was trading and it was popping up, but then it went back down. So how do you know when to recycle the trade? Because you're seeing that stall, right? Or flickering, or
it just depends on where the action point is, right? So there's a lot of things you would look for at the action point. So if it's stalling here, this is 50% of this candle, right? And so, and it's not really necessarily action point. I mean, I guess you could say that this is, but I would imagine that this would be the bigger one. So if it's 50% of that candle, that means that the pressure is definitely coming in to push it lower, right? So that's why I got out of that one right there and got into a couple. So one is to fix my trades that I just fix the loss I just took. The other is to start to make some profit. And if it would have shot up a little bit more, I would have gone into a full layer there. But I don't usually like putting trades on the exact position and like stacking 4 trades on in the exact position. I only will do that if it's a high probability situation where I'm trying to get as much on as I can in a short amount of time. All right. So I'm not sure if that answered your question, Duke, or if I understood your question 100%. So if it didn't, maybe rephrase it.
Well, it's sort of answering it because it's I do look for the action point, right?
Mm-hmm.
In this case, it was above the action point, so I was thinking it would continue, but on my M5 was still like in a down or something, right?
Mm-hmm.
I'm trading a different chart, but the point is, when it was just hanging there, I could have gotten it out as it falls, re-enter. So I am starting to recognize that.
Mm-hmm.
The other is when to find that confirmation of reversal. Because like right now, it looks like it's wanting to reverse on the euro there. But it could just continue down.
Yeah, for sure. And you get that confirmation of reversal really if it crosses this right there. Change it by color.
So I've done it before where like once it crossed, I would enter the buys and then the very next thing is it pulls back.
Yeah, I mean, all we're doing is trading probabilities, right? And so technically it hasn't crossed yet. And so that would have been a good place to enter into a sell because I do think, because you got to, what are the probabilities of it now that it's kind of come down and crossed this? The probability of it coming and touching here is greater than the probability coming and touching here, right? And so then we just trade with the world of probabilities. But if there's not enough profit to be had from this point to that point, then you don't want to get in. Here's when I should have gotten in. Does that make sense? Because now it's coming down and touching this. This is a possible bounce place. And so I just missed that move. And now I got to say, okay, I don't feel comfortable in buying this bounce because it's not a very strong bounce. But if this candle retreats at least 50% or even up to here, then I'd get back in with some sells. But right now is not a good time to sell because it's a possible bounce, but it could break. And so I'm not able to capitalize on the break per se because I didn't get in here. Does that make sense?
I have a target right there, and it comes down before and kisses it and straight up with that big candle, and it does it. And see, it's right.
You need to just accept that you just got kissed and accept the kiss. Don't try and get anything more. Just accept the kiss, take it, and put it in your bank and say, "Woohoo!"
And it does it again. See, it's moving away again. Another kiss again.
There you go.
Another kiss again.
Just take the kiss, man. That's all you're gonna get.
That's what I'm gonna do if it comes more than 0.4.
Yeah.
It's gonna take the kiss. Now I'll take the kiss now.
Well,
pierce it, but it's okay. I took the kiss.
Okay. I would take the kiss on the first attempt and I would have gotten right back in up there for another kiss.
Another case. Okay.
Yeah, because now it's more likely going to break. And
Yeah.
I missed another opportunity to jump back in right there.
Oh.
Now, for me, as it breaks, and we're kind of into a price cycle. If it comes down to here, if it comes down to here, you're at the end of a price cycle, and it could bounce up for a price cycle. So I would think that this is a stronger bounce point than that. So I would have played the sells here like that, got in here, got out here, got back in there, and then waited for it to come down to here and then see what the action point is. I just missed the opportunity because it was too slow on that. So again, maybe I'll miss that. But if there's at least 2 pips between there and there, I'll take it. See if it pops up. Allows me to put more on.
So how do you know which action point is stronger? Because a couple of times I'm going for the first action point, and then it just passes it.
The biggest thing that you look for is where it's at in relation to a price cycle, right? And so if we're experiencing 7 up, 7, there's 2, kind of 2, 6, and 7. You got 8, so you could say I'm between 6 and 8 on my price cycle, and then all of a sudden we're at 2 price cycles. The likelihood of it bouncing up 1 is greater the larger of the move, right? Kind of the overextended. Plus, the other thing you got to look at is I come over here on the 5-minute where you got like this is your 1 minute right here. That's not very strong, but this is a lot stronger. Does that make sense? Because it's established over here. Plus, you got kind of this guy right there. And so you got more points that the market has touched. And so I look at both of those. And if you combine both of those, then that makes for a stronger case for the market to bounce. And I'm not saying it's going to bounce all the way up and change its trajectory. I'm just looking for a price cycle, just a price cycle bounce. And so it could very well bounce up to here, test this point, and then continue to go down. And you would say that it's still within market structure. If that makes sense.
Yeah, because that action point could be corresponding to the same one in the 5-minute.
Right. And so I'm in a sell right now looking for a possible move higher. And as it moves higher, it breaks this, it gets confirmation. And I'm looking for it to come down and touch that, which it would probably will, but it probably gave me my kissing point right there. And so just look for an opportunity to get out of these right there. Any sells, but if it moves higher, if it breaks this is my confirmation that it's probably going to turn into a price cycle higher before it comes down and touches this. So I'll build into a sell position and keep building into sells for the possible test of this low right there. And now we have more information coming in, which are wicks forming on top, which means pressure's coming in to push it lower. It fell to give you that confirmation of a price cycle higher. So if that happens, and if it does break this, then you got to think into the future. Okay, we've ran down 2 price cycles. If it wants to go all the way down here, that's a 3rd price cycle. And so this now becomes a major bounce point if it does that.
Hey, here's a thought. So watching one of your videos. It's really helpful when you do your plot trades, like at the end of the day.
Yeah.
You were doing a video with plot trades.
Yeah. I tried
Kind of review.
I've been trying to do that at the beginning of the hour-long sessions because I just don't see people sitting through an hour-long session.
Yeah. Oh yeah, because you've obviously you were up to 3.33 when we started, so you could plot the previous, or just in general, it's super duper helpful if you. I wish we would do that more. We plot the trades.
You want me to plot my evening trades?
You don't have to right now, but at some point, yeah.
Oh
it's
no!
Super helpful to see the green lines and the orange lines. Like
you want me to plot my whole entire day's trading session, not just what we do together.
Yeah. Well, the whole thing.
Got it.
Just whatever the last 200 were.
I was trying to go back. I was trying to go back and do a quick weekly recap, and I was going to use the order history to do that. You know, where you can go in and Alveo. I don't know if you guys do this, but in Alveo where you go order statistics, and I was just going to put my week in for last week, and like it only does your last 1,000 trades, so it only gave me like 3 trading days.
Oh yeah. Well, that's a good sampling anyway.
I'm like 3 days. I hit 1,000 trades in 3 days.
How were the last 3 days?
You have to go to the web version.
Well, then the web version doesn't give me it doesn't give me it on the 30 days it does, but it doesn't give you like balances.
What was it showing you? Like what were the stats there?
It was just showing me the last 1,000 trades that I placed.
Yeah.
You have to export to Excel and do it. That's what I have to do.
Okay. Or also, if you enter slightly larger and fewer, it'll give you more of it'll cover more time. You know what I mean?
Sure.
Yeah.
Well, no, I think Sean has it purposely shut off, but your order history only keeps your last 1,000 trades, and it purges it for server space.
Sure. Okay.
On your local machine. I mean, obviously we keep all your stats, but inside of what Alveo is looking for, it's only looking for your last 1,000 trades.
True.
Yeah, it's too slow when you switch accounts if it's loading like 60,000.
Exactly.
But I mean, if people enter like a bazillion tiny little trades, it's only going to cover a short horizon.
Right. Exactly.
But if you enter fewer and they're a little bit bigger, it's going to cover more time.
Which I did that yesterday.
Yeah.
I actually entered a ton of 0.02, 0.01 trades because I was
Swarm. Yeah. Cloud.
It was just slow last night.
I don't know.
So I just was like, well, I'm just gonna start. And then I don't even remember. I didn't trade very much last night. I got into heavy position size because I was like in a marching market, so it kind of was getting away from me. So that's why I reduced it and just started smacking them in. And then it popped on me, and just waiting for that one pop, and then I got out, and it took me like less than 40 minutes for all of that. So that's always nice at nighttime when you only have to trade for like 40 minutes. Yes, Lee, it does seem like it's wanting to hold that channel, and I've done this like today. Just not gotten into very many trades. And it's not because I'm gun shy. I think it's because you guys are asking me questions. Which is great. This is fine. I mean, I'd rather be teaching than trading. But sometimes I just miss opportunities because I'm answering questions. All right. So that looks like that's going to happen, right? We're going to move into a 3 price cycle move. And so I'd look for a price cycle up here.
So would you start building into the longs at this point?
Probably. That's what I was just gonna say. You're ahead of me. I think you should teach the class.
No.
Anybody want to trade and teach? It's challenging.
I try to do that when I record my videos.
It's challenging. Well, yeah, that it's challenging too. That's a great practice, but doing it live is also really challenging. Yeah, I think I will. I think I'm going to start building into a buy for a possible price cycle up. Again, I don't think it's going to cross this area, but I want to actually find an area where I can put a few more trades on. So if I start buying into a down position, hopefully it'll give me the ability to put a couple layers on. Still got, 4 pips to run down the bottom. And if it just comes down all the way down to here and ignores this point or even this point without giving a price cycle up, that's the risk that you're taking. And if it does that, it typically only does that if you have news event or you just don't have a lot of traders in the market to take the other position. And that is something that as we get closer to the holidays, which I don't think we're there yet, you'll start seeing that structure coming in where you just don't have enough traders trading.
It'll also do that if you're in heavy long.
That's true. Yes. If you go in heavy and you want it to turn, that's when it will do that, right? But that is something that we'll need to be cognizant of more than like next week is traders exiting the market, retail traders.
So you're going to actively look to ride those waves next week or just trade light in general?
Probably both. You trade in the light while you're riding. So we'll ride the boogie board, not the surfboard. But generally speaking, I don't usually trade like the last couple weeks. The market usually doesn't come back until after New Year's to stabilize the market. And so it could be very detrimental to your trading if you trade and just it ignores price. And so it's like, okay, action point, price cycles, they don't mean anything if your market, if you don't have enough traders to come in and take opposite positions.
So I still haven't figured out when to get out of my trades. Earlier, I was on a losing trade first, and I got out or had an opportunity to get out as profitable. Didn't take it, and I'm losing again.
So that's great because I think that's what we're going to do. On Friday, I was going to do action points, but then I got into conversation about it's kind of like a conversation about brainstorming about future opportunities. But I really want to get back to action points because I think that I sometimes forget that to go back to the fundamentals of trading for challenges. And I always think it's good to go back to the fundamentals because that's what everybody needs to learn, right? Not the high probability trade setups are great, but if you don't have the fundamentals down, then you're not going to be consistent. And I would say that that's a fundamental. It's not a basic skill set, but it's a fundamental skill set. And so I want to make sure that's the difference, right? It's not something that you can learn in the first beginning of your trading. It's a fundamental skill set to learn when to get out before you can start adding in everything else. And it's easy to understand, but sometimes it's difficult to execute. That's why I'm calling it a fundamental and not a basic technique, right? I would say a basic technique would be drawing on your charts and finding where support and resistance is. I could teach that in a day and people could get it in a day, but knowing where your action points are, combining that with price cycles, are you into 1, 2, 3 price cycles, looking at that at trend, your bias, market structure, adding in chart patterns, all that kind of stuff changes your action points, right? Or changes what the action point could be. It doesn't change support and resistance, but it changes how strong or how much you should listen to an action point. And so that's kind of where I wanted to run that challenge, is because yes, support and resistance easy to see, but the action that you should be taking is fundamental, but not so easy to see. So that's a long way of saying, Duke, it's okay. We still love you.
Well, it's like you're holding on to the trade, hoping for that continuation, you know?
Yeah.
But you're at the action point, even though you recognize it, you're holding on to a false hope.
Sure, and that probably could have been the reason why you called me out on that one, where you said, "Hey, I got out here and then I immediately got back in."
Yeah.
Because I thought it could have gotten back up, but I wanted to take that profit. Do you know what I mean? And put it in my bank. Because to me, it's more important to take the profit than to play on a what if, unless that what if is part of your risk reward. Like, I'll let a trade do that if the possibility of breaking and turning into a ride the wave is the next possibility. But if it's just, I'm only wanted to move a little bit higher, and so my risk and reward is not that great, take it. Just, if your risk is where this could turn on me and eat up all my profit, take it. But if your risk, and your reward is that it just moves to the next action point, which is like 2 pips away, 3 pips away, take it. So that's start learning when to identify that. Okay, so for these trades, and I have to get it to turn there. And it's not turning, but again, ran all the way down here. So we're definitely 3 price cycles away. I'm building into a position for the possible bounce. And I just waiting for confirmation. I've kind of put on a layer here. And I'll continue to put a layer on all the way down to here. But as soon as it gives me the confirmation that we're going to go up, then I'm leaving some trades on for a build. So right now I'm fading into this move, or getting in early. As soon as it turns, I'll throw some more trades on after confirmation.
So on the 5 minute, there's this creepy M, and its eyeballs are M's.
Yeah, I see that.
That's creepy.
So what does that tell you?
That I'm probably in the wrong direction.
But you still have price cycles, right?
Yes. It's
So-
just creepy.
Yeah, no, I've been keeping my eyeball on that. But again, coming down here could come down here and touch this. But when's it gonna? I mean, we're definitely overextended, right? So, and I don't think you need much of a bounce. You could get this bounce up to here, right here, and it's then turn, and it still is in that same M pattern, right? Which would be the best way to play it, is you're building into a layer, you get out here, and then you flip into some shorts for a break lower. And just for me, I always get a little bit cautious when it rides all the way down to here and doesn't get, and because it's not a good place to sell because you're at the end of a price cycle, and it makes me nervous to buy because it could break and run. And so I tend to just kind of sit on my hands in situations like this and wait for a confirmation.
So right now we're in the buys, and if it runs against you, what would you do? Just take the stop, or
I always measure and see. I will let it run down to here as a possible bounce. And if it breaks this, that's when I'd get out. That's when I would just take the loss right there. But I already have that identified, right? And before I even started trading, I said, okay, here's where market structure could change. And so this is kind of my stop loss too on anything. Is if it crosses that red line. Slow market. Just going slow. Okay, there's the pop, the ride, and then build in. So now what I'm doing here is these trades right here need to go. And so if I can get a little bit of a turn just to come back on the first retracement of a breakout, popping back up to here, and if I can get it to pop back up to here, get out and fix everything and just kind of start over. That's what I'm looking for.
so even though I see the action point, it's very hard to hedge against your own trade, and taking that opportunity.
Because you're in buys.
Right. So what helped you to build that?
Because got to get out of these guys. So in order for me to get out of these guys, I got to get profit down here in order to not take a loss on those guys. And because it popped, first retracement rule will come into play where usually we'll pull back and test this. But because it fell on that 50% right there, because it fell here, it makes me nervous that it could continue to run down. But generally speaking, on the first pop, comes down, touches that, usually get it to pull all the way back up to here. And if it does that, then these trades will fix all of these trades. And so to me, it's more important to fix these trades and get some profit. But it failed to do that. So I'm like, oh, you bugger. Failed to go 50, to even cross that 50% line. That means that it's that first pullback didn't materialize. It's still a high probability trade setup, and I take that all day long, but it's not 100% guarantee trade setup. It's a high probability that it's going to happen. And now the only hope I have right this second for that to happen is for this candle right this second needs to hold above the blue. The body needs to close there. And if it fails, then it's a dirty bugger. Still kind of early in that candle. But you see now that I was losing, 50 pips or whatever. Now I'm down into, the teens. And on that pop-up, I was like 17, 18. And so I would take that as a whole, and that 17, 18 pips is a lot less than obviously the 50 pips I was taking, and just look for an opportunity. So it's like right now I'm not in fix it mode, but I'm in just adjust the mode, trying to get that reset back to zero so I can look for market structure to kind of change, because I don't like trading in this type of a marching market environment. And if it wants to continue to get into a margin market, well, I'm on the wrong side of it. But this is also a good balance point. So things like I was talking about, right here could bounce and go higher, right here could bounce and go higher. But if it crosses this right here, it could continue to march all the way down. And I don't want to be in these trades if that's going to happen. But let's see if we get that price cycle back up. So now is the part where do I take it here, take the little bit of a loss, or do I wait for it to kind of come up and touch this? And that's the question that you have to ask, and there's not really a solid answer there, right? But kind of going back to your trade where you didn't take it and then it made it worse. Sometimes it's better to take it than be fine with taking it. Sometimes it's better to hold, but only you can make that decision.
Well, in this case, I held, but it was in my favor because I added on more trades, and then I hit the 1%, right?
Mm-hmm.
But I've had it before where it just turned and it never came back. So
yeah,
the point I've learned is just to take the profit at the first take, and then trade your next opportunity.
Live to trade another day, right?
So right there, I probably would have hedged it and sell to test the lower zone, but that's super hard. Like,
I was just thinking the same thing. So I was like, man, I should have probably put a sell on it then. And I was just thinking I was going to put a buy on right there. I am just like 2 seconds too slow in this market today.
Remember, you're still sleeping.
That's right. Thanks, Club.
You're welcome.
I need all the excuses. I'm teaching. I don't have the right cursor on. All the excuses that I can use. But you're right. I would have I'd look and sell down to here and then buy back up, and just quick opportunity right there. I think I'm going to take the break even right there just to get me out of a little bit of a heavier position that he's in. And then as it pops up, here's the price cycle back up. It's kind of,
if it closes above that blue candle.
Yeah, it closes above the blue candle. I'm still going to sell into this only because you got this market structure coming in right here. And sell into that. Not really heavy because I was expecting this price cycle move higher. But we'll see if it changes. If this price cycle move wants to move 2 price cycles or 1 price cycle.
One, at least one.
So I'm looking for my take profit action point to be right Here's one, and then there's the other. And if it comes and ignores this, it comes down and tests this low, then I think it's probably going to come down to here and test that.
Right. So many times I would think like right here, it's going to continue the down, and then, maybe it was at the end of the price cycle, and now I'm chasing the market basically, and it runs against me now. So if it continues up, let's say 50%, would you start buying now?
Yeah. So the one thing you got to look at is the market doesn't usually trade in a V, but it just did. Does that make sense? Then you got this consolidation. And so can it came into a V here again, another V, right? And so is it going to do the same pattern, or it could come into another V, right? So this is a small V, bigger V, and this would be even a bigger V. Or if you look at it like that, it could turn into a big old fat W for attempt to move higher, right? And so those are things that I'm looking at, predicting the market, not forecasting the market, but market generally doesn't trade into a V. And so if it's going to move up and test the top, you'll probably get some consolidation right here. But if it's going to move lower and continue, then you'll get continuation of this trend. Either way, I think selling right now is the better option.
Well, I mean, like it'll come halfway to that previous pivot, the resistance zone. So let me see what price it is.
So I'm always constantly just looking, seeing what the market could do, right? And then if it does, you have, you say, okay, it could go up, it could go down, and it could go sideways. And if it does one of those three things, then you're right. And you're always right. Never wrong. I call the market right every single time I trade. I just execute it wrong. I like it, Josh. Your face says it all.
So I was thinking it would come up to 105.63 there, and then it'll drop again.
Sure. And so what I'm doing is I'm thinking the same thing. So I'm just building into a position, but again, seeing if it's going to cross this. If it crosses that, where it's teasing to cross, then you're going to could get a double price cycle move, which puts you right into here or even here. So right now, I think what I'm going to do is just start taking little sips out of the market, just hunt for 2 pips and see if I can't recycle. Because it's not proving to be very consistent in its price cycles.
It's inching its way up.
Mm-hmm. Started doing that, just hunting for little sips. And whenever I start to hunt for little sips, I'd start to put more trades on. Because I'm instead of going 1 for 4, I can go 2 for 2. Right? And so that's just me though. I'm gonna let my dog out real quick.
Who lets the dog out?
A slow moving market today. Slow moving. One direction. That's probably because we don't have news today. And if you don't have news events, then a lot of times retail traders who like to trade the news aren't there. So you don't have that up and down movement. So Duke, how long and how often, let's start with how long does it take you to hit 1% on a normal trading day?
Usually about an hour.
And how often do you hit that 1% versus maybe taking a loss, right? Do you have like a pattern of like 3 winning days, 1 losing day, or something like that you know? You know what I mean?
It's kind of backwards right now, just because in the past, getting the timings right has been hard.
Mm-hmm.
I would even see the price actions, and it's just that because I put on the wrong trade, I'm biased to try to fix it.
In the same direction.
Yeah.
And so you don't look for.
So that was the past, and then based on one of your comments, that helped me as far as like, hey, let's just take it off and flip it. So what I'm hoping is it's more consistent, you know.
Sure.
Once I go for that, let's say I'm aggressive and now I take too many trades or I put too big of a lot size, then I'm getting to -2 really fast. And now I'm in fix it mode. And so I'm just mentally blocked. But when I trade with the proper sizing and everything and fading, I get to 1% like very, very easily. But it's when I'm trying to chase that 4% that it's just like, man, everything goes against me.
Well, that's the next evolution, right? And so at least you're chasing, but when you get that aha moment and you start to figure it out, but you have to go through this kind of iteration, right? Everybody does. If you're trying to grow, and do things that you've never done before, well, guess what you're going to do? You're going to do things that you've never done before. And so you're not going to know how to, you don't have the experience to manage it yet. Does that make sense?
Exactly. So, like previously I was on a 0.01 lots. So I was scalping and I was trading like 30, 50 trades. I would max out at 50 trades. Mm-hmm. And then I was like, because I was trying to get that fast percentage, I would be at 0.1 lots and still trying to put on 20 trades. So I maxed out way too fast. And then I learned, okay, it's number of trades. It's not a lot size.
Right.
So I need to figure out how comfortable I am at my number of trades, which to me is about 20. And I find myself sometimes too impatient. Like I'll know when the price point is going to change, but I'll put on that trade early just to see something. And I'm just like, now I just put on limit trades, or I will actually sell or buy to that action point. So that has helped me there. It's just taking a continuation instead of a reversal.
Oh, that's awesome. I think that's pretty cool. I think more people should start like, I think if you start making like you're really good at saying this is what I've learned. I think if more people can start doing that, like you post it in Discord, it's a great place to do that. Like what have you learned? What are your takeaways, right? Because by saying it or writing it down, it embeds it further into and it turns into a skill set instead of just saying it to yourself or hey, that was a pretty cool comment that somebody made, or that was, I should incorporate that in my trading. Say it out loud and share it. And it goes back to, I don't know if Debbie's on here, but it goes back to see one, do one, teach one, right? And so you see somebody do it, then you do it, then you teach somebody else, and by teaching somebody else could be just as simple as, hey, this is what I learned today on Discord. It's like, I love it when this happens, and then embeds it into your skill set, right? And I really believe strongly in that, and I've said it a lot. So I appreciate you sharing that with us, Duke. And so I'm just asking for everybody to jump on the same bandwagon. You know, hey, if you see somebody do something great, then do it yourself, and if it works out, then teach somebody else, right? And say, hey, this is what I saw. This is how I saw it. This is what I did. And I'm going, and then it embeds it into your trading. I honestly 100% believe that for sure. So again, thanks for sharing that. All right. So let's talk about action points for a second, because I think that's the challenge of the day. And let's see, Hobble Wobble, are you in a position where you want to be a part of this conversation? Like, can you share your screen and talk and all that? If you're not, okay.
Yeah, I should be able to this morning.
Okay. Then as I've had some side conversations with him, and I feel like this skill set is something that you could utilize in your trading. Everybody can utilize it in your trading, but I think this is one of the things that you might be you get this down, and your trading will probably be a lot more consistent. If that makes sense.